Good morning, folks. Thursday, October 26th. A lot to cover this morning. Let's start with the macro and geopolitical look over here. I actually think I'll get into the details, but I think today could be a bounce day in the market. So yesterday, towards the end of the day, it was like, oh my gosh, Armageddon's coming. But guess what? When it doesn't come, then the recipes there to get a bounce. So we actually were short overnight, but I closed all my shorts this morning when ECB, European Central Bank, they instead of raising rates, they kept them flat. And that was the first time after 10 consecutive rates up. Okay, 10 consecutive times they raised rates, and then they kept them flat. On that, I decided to cover my short. And then at 8:30 a.m., we had a whole bunch of economic data come out. Very interesting market reaction. Okay, because economic data, well, the two pieces of good news, one piece of bad news. And the good news is bad news is good news, right? So what I'm saying, two pieces of good news: GDP much better than expected, durable goods much better than expected. Like we've been in this paradigm where good news is bad news. So you would think, wow, market would go down, right? Bonds would go down, rates up, stocks down. But there was also jobless claims down. And I was actually listening to Bloomberg on the way over to the office, and they were also confused. They're like, what's going on here? Like, we don't get this. They're like, all right, the only possible thing, maybe the market is discounting the GDP and durable goods and looking forward to the jobless claims being worse than expected. So maybe jobless claims worse than expected. Maybe that's bad news for the economy, which is good for bonds, good for higher. They're trying to make sense out of it. I just think I have a simpler view. We've just been down sharply for several days in a row here with everything going on with earnings and with geopolitics, that it's looking for any excuse. And, I think the ECB maybe was a good excuse to get a bounce here this morning. So that's the macroeconomic data. And then let's get into might also affect macroeconomics. First thing I want to point out, thick of earnings season. Okay, so earnings season here, we're starting with Meta. Yeah, Meta on down, reported last night and this morning. Okay, so a couple things I want to point out though is we first started with Snap with the warning on Israel ad spend slowdown. Guess what? Meta had it too. Meta also said the Israel conflict decreased ad spend, and it's impacted their guidance for the coming quarter, even though they raised guidance. Then also, who else did that? It was Royal Caribbean, RCL. Where are they? Down here. All right. They actually beat very nicely, raised very nicely. We'll get into it. But they also said because of the conflict in the Mideast, they're going to reduce guidance by a few cents. Overall, they're increasing guidance, but it could have been a few cents better, like about 3 cents, impacting earnings by 3 cents. So this is a real issue. All right. So this Israel war is having a direct impact on the economy. So just take a note of that. All right. Okay. So all in all, I think the market may be set for a little bit of a bounce today. And let's look at these earnings. It's too much. Look, there's too many earnings for me to really dig into. I just kind of scanned to see what caught my eye. What was good earnings? Okay, and the ones that caught my eye that were good were Mobileye, Royal Caribbean, RCL, and Opera, also OPRA. These all had really big beats, especially in the guidance, the EPS guidance. Okay, they all had nice EPS guidance beats. That's Mobileye, Royal Caribbean, and Opera. And I think STM did also actually. Let me just see. Okay, they beat, but where's the guide? I don't know. All right, I don't have time to look into it, so I'm not sure if the guide went up, but they beat nicely on the EPS. Okay, so so basically, I'm going to switch over that morning show list, and I'm going to focus in from the ones that reported earnings on Royal Caribbean, Oprah, and Mobileye. We'll actually dig into the reports real quick together. All right, so let's do that. We got the morning show list. I got 5 stocks. That's the focus for today, and you see Royal Caribbean, Oprah, they're up there. Mobileye I currently have as number 6. I'll tell you why it's number 6. And but first, actually, let's just talk about Oxy. Occidental Petroleum, Form 4 came out after 8 p.m. Warren Buffett purchases an additional, I think, $250 million of stock last night after the stock takes a beating. Why did the stock take a beating? Because remember, we played Oxy when there was a big buyout. Man, it was Exxon buying some oil company. And then, remember that? It popped, it gapped. We played really well that day. And then what happened here is then there was speculation. Now Chevron would buy Oxy, but what happened was Chevron decided to buy a different competitor. So then you gap down. All right, who was it? Chevron is buying. I don't even remember. All right, doesn't matter. All right, Chevron buying someone else, not Oxy. Maybe it was Hess. So there it is. Hess. Chevron buying Hess. All right. So people got all upset. I guess they're like they thought Oxy was next in line. So it took a beating. Warren Buffett took advantage of that, but $250 million worth of stock. So actually, we're down on this. I bought it late last night after I saw the news. But this is a little bit tricky because oil has been crashing this morning. Oh, now it's taking a rebound because the market's rebounding. So that's good. That's actually a good sign. All right. So with oil, if oil can stabilize here or rebound, then that could make Oxy a good bet today on the Warren Buffett purchase. Okay. And maybe it's just got to make back some of this gap loss over here because, okay, Chevron's not buying them, Exxon's not buying them, but is there another big oil company that's going to buy them? Maybe. I don't know. All right. Probably. All right. Maybe the same ones will. Maybe they'll buy 2. I don't know. So Oxy's in play. Royal Caribbean. All right, let's dig into the numbers on Royal Caribbean. Royal Caribbean here, they had a nice big beat. Let me see if I could find it. I think it was about 7%. All right. So see on Q3, you can see the massive beat. 385 versus 346. Huge beat, right? Percentage-wise. But I only care about guidance. So we got to go up and check the guidance. I must have checked it. Okay, here we go. Sees full year guidance of roughly 660. And I believe it was versus 610 before. Where did I see that? Let me go to, I think I saw it in Webull. Here it is. Okay, 660 at the midpoint versus 610, where it was before. That's the number I care about. Okay, 660 minus 610. What am I doing? 50 cents, yeah, divided by 610. All right, so they're raising guidance by 8%. One caveat when you do this to make sure, because they also, you can see, they beat 40 cents, 385 versus 346. They beat it by 40 cents, 39 cents. So you want to make sure their guide is more than a 39-cent beat, and it was a 50-cent beat. Okay, like if you beat for the quarter by 39 cents, but you guide up for the year 38 cents, that stock's going to get hammered because they're like, oh, no more growth, going forward. It was just a 1 quarter thing. But they beat nicely, and they're still raising by another 11 cents. So now you can say, all right, that 8% beat has meaning. I actually jumped into this when I saw it, it was only up like 2%. I guess this is probably no. I think my average price is a little lower than here, probably 83.50 or something. It's a little bit scary. So I got in like 83.50. It went down. I'm like, why did it go down? Because maybe that bit of bad news, that 3-cent EPS loss in Q4, right? Even though they're beating, it would have been another 3 cents. So with the Israel war, what if you take 3 cents and you annualize it? That's 12 cents. What if you put a 20 PE on it? That's like $2.40. So, so because of Israel, like this stock maybe is going to be $2.40 lower than what it otherwise could be, right? And maybe that's why the stock went down this morning. People worried that maybe it would spread and impact other stuff, and I get that, and that makes this trade a little bit tricky, right? So I don't actually expect a full 8% re-rating because of the war. If we did not have the war, then actually I'd probably be in a huge position in this, and I'd be looking for like an 8% re-rating. What would the close out yesterday? 82.22. Let's just do this anyway. 82.22 times 1.08 will give you 88.80. All right, 88.80. Let's triangulate this with technicals, and it's in the middle of no man's land. So I don't know that I'd even go that far. I'd just go the 20 DMA. So I would give this a target of the 20 DMA here at about 86. So Royal Caribbean, 86 target, but not so crazy gung-ho about it. I'm going to not have massive size because I just worry, looking at this reaction in the morning, that there's going to be this sentiment out there that they're not going to reward it fully because of the war that's going on. All right, so that's Royal Caribbean. Then we have Oprah. Oprah had a big beat. This is a AI company. This one, let's see if we can do the math again here together. All right, they beat on the top and bottom. Where was it, man? It was something around, okay, it was like 17% and 7%. I just want to did the math. Where did I do the math? Okay, hold on. See what a business outlook. All right, here we go. Okay, here we go. It was in their press release. They made it easy. Okay, so for the fourth quarter, look at their fourth quarter guide. They're giving their guide. Then they say adjusted EBITDA guide is 23 million versus prior of 20.5 million. Okay, so 23 million versus 20.5 million. 23 minus 20.5 divided by 20.5, 12%. Did I do that right? Why did I have 17% earlier? 19.3 and 21.3, that's $1. Okay, 1970, that's why. It's 23 and 1970. So 23 minus 1970 divided by 1970, 17%. Now we got it. All right, so they beat by 7% on EPS, and they guided the next quarter for a 17% beat. So those are the two numbers, 7 and 17%. The stock's currently up 5%. So I like this bet. It's you don't like seeing this price action, like, why is it going down? And it may not work, right? So you always have to make calculated bets. Manage your size. You might lose on it. I don't know. I might lose on this one, but we're in it and looking for a minimum of like a 7% move, maybe possibly up to a 17% move. Let's see what the close was yesterday. 1068. Let's see what a 7% move looks like. 1068 times 1.07 takes you to about 1142. 1142. Triangulate that. I can say kind of maybe it's just going to get blocked at the 20 DMA. All right, let's see what it would look like if we did the full 17% based on the guidance. So again, we close at 1068. Let's go 17% of 1068. And we come up with 1250. Let's triangulate that. What technicals are near 1250? This gap right here. Okay, so you got these moving averages above 1250, but then you have this gap up here at open at 1220. Okay, so I think this is going to be your range here. It's the 20 DMA to 1220 target. So 20 DMA roughly, let's call it right where it is now. So like 1120 to 1220. Let me just double check this. Sorry. Yeah, 1120 to 1220. That's your target on Oprah today. Okay, Oprah on raising their guidance, 1120 to 1220. All right, Royal Caribbean, I think I said 86. All right. And Oxy, by the way, Oxy, I don't know that I have a target on this. It's like maybe just we're in it. We're just gonna it looks like it's not breaking any intraday lines, and if it is, we'll be out. I think that's how we'll play Oxy. Okay, because we don't have like a re-rating value on earnings here today. I mean, you do have that gap, but I don't think this is viable to say we're going to go for this gap here today when oil is down. If oil was not down, then yeah, maybe I would say, okay, Warren Buffett's buying, maybe oil's green, then I would go 64.19. That's your target. If oil turns around, then that's your target. Okay. Oil's trying to turn around. If oil gets to break even or green, then that 64.19 would be a target on Oxy today. All right. It's 9:15. I'm going to skip Powell for a second because I want to spend a little time talking about the war. I mean, not the war, the shooting event last night. But let's go to first Mobileye, which is not in the top 5. Mobileye actually also beat EPS guidance by like 7%. And it was down. It was not up. I decided not to jump on it. Maybe it's a mistake. The reason I decided not to jump on it is because the entirety of their beat is based on cost savings and not a revenue increase. All right. They didn't beat on revenue. They didn't guide for higher revenue. It's just cost savings gives them 7%, beat on EPS guide. I guess Wall Street likes it. They're moving on that. All right. Maybe I should have done it too. Congratulations. But I didn't do it. And that's why it's the number 6 pick. I'd just rather have some. I may be totally wrong on this. My preference. I'd rather, play an EPS beat when it's also a revenue beat. All right. I want to see the top line growing in a company. So I just avoided Mobileye. Again, looks like so far I'm wrong about that. All right. Then LAP, 3 days in a row of news, right? We covered the Lockheed Martin deal and we played that gap Tuesday morning. Then yesterday we gave you another deal. It's like a $4 million contract, $4.7 million contract with the European Space Agency. I didn't think that was too significant, to tell you the truth. I didn't focus on it, but man, it had a technical breakout and we played it a little bit during the day. Then this morning, another Lockheed Martin extension of their contract, $7.7 million. All right, now you're starting to talk, man. Deal after deal after deal. All right, so I did actually jump into this for a quick trade at like 82 cents and sold it at 90 cents, but it was a small size. You can get big volume. All right, and I'm looking to maybe get back in on this, like close to 82 cents if it gets there. At this point, you got to say you've broken all the levels and the target could be $1. All right. First, you got to get past pre-market resistance if it has a good day here around 92 cents. But LAP has a chance for $1. So like support maybe at like 84 cents actually from what I saw on the chart. So LAP on that good news, 84 cents to $1 target. Okay. Now let's spend a little bit of time talking about what happened with the shooting last night and relating it a little bit to the war. And then we'll try to order these top 5. So last night, ongoing situation, unfortunately, in Maine. Active shooter, 22 people dead. I don't know, like 50 or 80 injured, something like that. Now, everyone's first fear last night, and I was watching the overnight markets. I think it was related. People are like, "Oh my gosh, is this terrorism? Is it related to the war in the Middle East?" And it turns out I don't think it is. It's from what we know, it's not. Okay, but at the time, UVXY was flying, markets were crashing. If it turned out to be, right, if it turned out to be a Hamas or a Hamas sympathizer, forget it, man. I don't care what any technical analyst says about support levels or anything. I think like you're going to have massive, crash in the U.S. market. So that didn't turn out to be the case. Now, normally the past paradigm of major shootings have been that gun stocks have gone down. Okay. They've gone down. You have POWW, SB, SWBI, and RGR. They've gone down because the logic is, there's another gun shooting. That's more pressure politically, for the Republicans to come together with the Democrats and make buying a gun harder to do, which long-term is bad for gun stocks. That's been the paradigm in the past. Now, I think it's totally different. With the context of what happened, and everyone has the border infiltration in Israel on their minds in America. I think when you see this, I'll tell you what I think. I think if one crazy guy, one deranged guy, with a mental disorder can do this, then what can a few terrorists do? What can a few organized, Hamas people do in America? And it's not going to look pretty. So there's already been a huge tailwind for guns. And I think the way I'm seeing it, okay, is going to be how the rest of the market sees it. That's what I think. And I think you're going to see buyers showing up because of that today in stocks like POWW, SWBI, and RGR. By the way, SWBI, oh, look at that. SWBI had a really nice day yesterday. What is this? That was not on much volume. So SWBI, really nice day, bucking the market trend yesterday, bouncing off the 20 DMA. So gun stocks looking strong, holding moving average supports. So I'd like to get into POW, not like taking out the ask here at 256, but we already have a position. But that could end up being the biggest winner of the day. Very possible. All right, so now let's see how we're going to order these. It's a tough one today. You got these top 5 picks. You can see Royal Caribbean behaving the best. I may have to do that just simply because of the pre-market action. And the level I told you is 86. Let's see. Are we over the 200 DMA? We are. That's nice. Okay, I may have to do this. We went through the beat with you. It was a solid beat. I hesitate a little bit because they did say the Israel war is impacting. Who knows to what extent the market will look at that and say, well, I don't care that you raise, this war is going to get so much bigger and no one's going to cruise anymore. Like, that could happen and the trade could fail. So I hesitate a little bit. And then we also have Oxy on the other hand with, let me see how oil's doing. Oxy could end up being the big winner of the day if oil does well. So we're going to choose a number one here, but we're going to be flexible and we're going to maybe change that number one pick based on price action mid-morning, late morning, and we'll let you guys know in the VIP trading room if we rotate out of a top number one pick to another. So I guess I'm just going to start with saying Royal Caribbean because of just the strength of the pre-market action. And we also have a re-rating calculation. Oxy, we don't, right? So $86 re-rating when triangulated with the technicals, all right, on Royal Caribbean. And then should I go Oprah next? Because that's also a re-rating. And I gave you and we're kind of at the bottom of the range now, 1120 to 1220. I think I'm going to do that ahead of Oxy, even though I love Warren Buffett. Could work out. Okay, so Royal Caribbean, Oprah, Oxy, and then we'll give you that Gunstock, POWW, and LAP. All right, those are your top 5. I could definitely see the number one switching to Oxy at some point today. You know what? Oh, man, I hesitate. Let me tell you this way. We try to focus on options. So percentage-wise of the stock, like Oprah, I think Oprah is a better bet than Oxy today if you're just buying common stock. Right now, at this price, I think Oprah is a better bet, right? But if you're doing options, then it could be Oxy ends up being better than Oprah. So if we're going to, even though it's listed number 3, we may be switching RCL to Oxy and making that the number one options play today, okay? So RCL and Oxy are like the top 2 for options today. And then Oprah, I like there, second pick overall. I hope that all makes sense to you how I'm doing logic on this. But those are the top 5. Royal Caribbean, Oprah, Oxy, POW, LAP. And we always have to keep in mind, listen, we've been right on since the Israel war to have this downward bias. And to be honest with you, we have not hit it enough. We have not hit it enough in terms of shorting the market or shorting pops, right? So maybe that's something we just have to be aware of more to short pops in this really, really tough market. All right, guys. That's it. I'll give you an update at 1 p.m. See you soon. Take care.